Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into the action today on this Monday, July 1st, 2013. Markets are coming off the highs of the day. We started with a nice gap up today and a good push up in the first 30 to 40 minutes of the trading day. However, no sooner did that happen, we put in a pivot top, traded sideways, and have now fallen back down almost to those opening levels, which would be right around this blue trend line, the highs from Friday. So, bottom line is, the markets again continue to see some extra gains, but by no means is it a very strong market today because, again, we are giving up those gains. Now, a couple other things to look at here. Number one, the markets here, folks, are again trading into a holiday. So remember, the 4th of July markets are closed. They close half day on Wednesday, the day before, and on Friday they're open, but it's going to be dead. In all fairness, it's already dead today in terms of volume. So the market in general, I would expect to stay neutral to positive going into the next few days, but I think that sets us up for some downside following that period. So if we trade up into July 4th and the following, couple days of July 4th, then look again for the markets to get weak again as they come back in. The reasons I say that are very simple. Number one, you still have a bigger move down from this point. So even if we trade up a little bit more, and I think we go to this area, see this area right here? This is a gap fill. So right around the 163.50 level is a major level, and I'm looking at that as being the high area. Maybe we get a little bit above that, but for the most part, that should be your target on the upside. And I think it'll take a few days for us to get that into the end of July 4th holiday weekend, and maybe even into next Monday. But once we have that put in, I think the markets do get a little jittery again about the Federal Reserve. I think Chinese worries are very, very heavy out there now as the Chinese economy continues to look like it's slowing. In addition, Europe, in all fairness, Europe's still a mess. They've kind of hushed everything there, but nothing's really been fixed in Europe by any stretch. So all these factors, to me, continue to keep me on alert, understanding that the market is going to bounce, which is good because we've taken advantage of that with some long plays like the spiders, which I sold on late last week for a $4 gain, and then Southern Copper, I'm long almost up $1 on that, and so forth. A few little longs. RSOL, I'm still holding second half after making 28% on the first half. This was a no-brainer play. We bought right down here and sold it right up here. So that was a good play as well. It's actually consolidating, which should break higher as well on RSOL. But, I already took half my position off the table with my members here in the research center at InTheMoneyStocks.com. So, listen, when the market bounces, sure, let's go long. But when it falls again, we need to be on the right side. And that's what I'm going to look to do in the next, probably Friday action into next Monday-ish, start to look for those perfect chart setups. A couple chart setups that I do like. One is Goldman Sachs. Guys, take a look at Goldman. Goldman's creating a beautiful in spirit of bear flag pattern here. Look at how it's forming right below the 50 MA with the 20 sloping down. So over the next couple days, the 20 is going to come closer and closer to that 50 in current price. What you want to see is Goldman trade sideways into the end of this week and then early next week. And then if that happens, it's a great short setup. That's just a fantastic short setup. Another stock I'm watching is a possible short. I don't know if I'll take this one, but what I'm looking for is Boeing at 107 and change. If you go to your monthly chart on Boeing, you can clearly see, if I zoom out here, the highs from 2007 right up here. All right, that is your target area right now. You're still about $4 away from that, but again, if the markets float up around the holiday here, very likely Boeing could get in that range, and I think that's where you start to look at the short side on the play. All right, so again, that's very interesting to kind of note there. If we take a look at some other stocks out there that are rallying today, Apple's having a nice update today, guys. Apple up about $14. This is something I told my members to expect, mainly because, remember, I said this last week in the Technical Analysis Nightly videos, which are just for members. I said, listen, the institutions and these money managers don't want to have Apple on their balance sheet or on their books going into the end of the quarter. So that means a lot of selling last week into Friday. Friday, if you note, we actually turned around and went positive because all the selling was done by these money managers. All right, and again, guys, just so everyone understands the kind of the shadiness of a lot of these funds that these money managers handle, as long as they sell that stock before the end of the quarter, it doesn't go on their holdings list to their clients. So I mean, you could literally sell a stock last day of the quarter, and it doesn't show up to all your clients that you were holding that all quarter. So no client wants to see that they were holding Apple last quarter because it did absolutely nothing. So again, money managers don't want to show that. Therefore, that's why the selling pressure was into Friday. Notice how the quarter ended on Friday, and what's Apple doing today? Up $14. All right, did they have great news? No, nothing really. It's just the lack of selling. So institutional selling, money managers no more selling. This quarter's done. Apple can bounce back. Very interesting little tidbit there to understand. I think that's so interesting how these money managers don't have to show that on their books to that they were holding a stock. All right, Chevron guys today. Nice day on Chevron, but even Chevron's curled around here. Notice the 50 MA though. Nice little bounce there off the 50. Good push up early, giving a lot of those gains back here. Still up $1 on the day, but again, well off the highs of the day here. Notice the low of the day, too. When this thing opened, it flushed down to the 200 and then reversed. That's a sweet level there if you could have caught it this morning. All right, and JP Morgan. I think JP Morgan's worth noting here, guys, because look at the sell-off on JPM. Right, that's a very poor showing for a market that's still up relatively well across the board. And just to give you guys a sense here, what we're seeing here on the indices, the S&P up 12, Dow up 107, and Nasdaq up 35. But to see JPM, which is a leading indicator, weak on the day, only up 13 cents, definitely should be taken note of. So that's again, I still think they hold this market up generally well into the holiday and so forth. Maybe a little profit taking before the holiday just because people may not want to hold while they go away on vacation. But you know, this could be again telling us that weakness comes in after that. And I think that could be something very intriguing to note. Okay? All right, guys. So that's what we're seeing there. BlackBerry's down again. Remember, BlackBerry got crushed last week on earnings. Stock is down 30 cents off its lows of the day, but pretty close to those lows overall. Some Chinese stocks, small caps, are going today. Take a look at Sino Shipping. This is a shipping stock. Just took off all of a sudden today from $1.50 now hitting a 225 move. That's basically a 50% move on the stock from the lows to the highs, essentially. And that's just an amazing move. Moby was up today. Take a look at Moby, up 29 cents, another small cap Chinese play. The small cap China plays are very interesting. One stock I'm watching here very closely, a couple Chinese small caps, SGOC, watching for some action to the upside. I think, again, it's pulled back right in here. As long as Chinese stocks stay hot and the market stays relatively neutral to positive, this should be a runner. Also, Cali. Keep an eye on Cali, CALI. All right, the symbol for the other one was SGOC. This one's CALI. If you look at back where this was trading, I mean, this was a $5 stock. Now it's trading at $2.85 or so. It's below the moving averages, but that doesn't bother me on a small cap China play because when they roar, they roar. All right, so very interesting there as well. Let me see if there's anything else out there in the arena that I want to mention. Chinese Solar's having a good day. Canadian Solar CSIQ having a nice day. JASO, JA Solar. Let's take a quick look here at that one. And again, that one is showing some good signs as well. Look at that nice up 21 cents today on JASO. All right, so that's what we're seeing there, folks. Again, some good moves on some large players, but JPM is strangely weak, which again should be a leading indicator and something to watch for us. Overall, holiday volumes in session here. Small caps are doing well today, mainly led by what I'm noting is the Chinese market, the Chinese small cap market, very hot right now. And I think that's about it for now. All right, guys. So again, come join us here at InTheMoneyStocks.com. Take the 7-day free trial. Let's rock and roll, folks. Take it. Let's make some money. That's what we're going to be doing this week, just like last week and every week before that. Take care, guys. Again, come join us at InTheMoneyStocks.com. Take the 7-day free trial.